Good morning, everybody. We have a mixed trade in the grain markets here early on Thursday morning. It is 6:30 a.m. Central Time. May corn futures down 3 3/4 at 5.53 1/4. May soybeans are up 13.5 at 14.39 1/4. May Chicago wheat is down 1.5 at 6.84. May Kansas City wheat is down 2 at 6.61. We have the spring wheat up 1 or 2 cents. In the news here this morning, a record Brazilian soybean crop appears likely. I discussed yesterday the higher estimates that we saw from a few different groups in regard to the size of the Brazilian soybean crop. Reuters then released the results of an analyst poll late yesterday. The group pegged the Brazilian soybean crop at 132.89 million metric tons. And you got to remember that last year's record, according to USDA at least, was 126. Some of the early week estimates that we saw from some of these other groups were actually higher than the Reuters number here. So it looks very likely at this point that the Brazilian soybean crop will be record large. Now, they've got harvest delays in Brazil, and it's being reported that soybean crushers in China may slow production as a result of these delays. This was a quote from a crush plant manager in southern China. Bean shipments from Brazil to southern China will be very limited in March. Supplies will be tight. He said that they had originally planned to suspend operations for a few days, but now that few days is probably going to extend to a couple of weeks. Soybeans out of the U.S. are scarce. They're drastically overpriced versus Brazil. If Chinese crushers can just wait that 2 or 3 weeks until they can get into Brazilian beans, the prices are much more attractive. So I think that that's what they're going to do. Last week's U.S. ethanol production number was the lowest since May of 2020, a total collapse in ethanol production last week. Weekly output of 658,000 barrels per day was down 27.8% on the week and down 37.4% versus the same week last year. The drastic drop in weekly production can be attributed to what's being called the polar vortex from last week. Power outages, disruptions in the natural gas market took some plants offline. It was also reported that some plants opted to sell their natural gas inventory rather than grind corn, as natural gas prices, natural gas prices just surged temporarily last week. I'm going to show you a chart here, which is really phenomenal. We've seen such incredible volatility in ethanol, and this whole situation has gotten really interesting since COVID. I mean, if you look at like the pre-COVID numbers, which are these upper lines here, this is like 2019, 2018, 2017. There's really like not any real volatility in ethanol production. I mean, you'd see some back and forth and some seasonal stuff, but then 2020, you see this massive decline in the spring, a big build back up, but we never returned to pre-COVID levels. And then this 2021 bar, given last week's activity, almost looks similar to like what we saw in spring of last year with the big decline. Now, all that being said, I think that this decline in ethanol production is short-lived. Margins have actually bounced back nicely, so I would imagine that we'll be back to where we were just a couple weeks ago very shortly. Now, do we return to pre-COVID levels anytime soon? That is a different question, and I really don't know for sure. The U.S. dollar is again pushing lower. Spot month U.S. dollar futures traded their lowest level since early January overnight. The Fed sent yet another dovish message yesterday, indicating that easy financial conditions, additional fiscal stimulus would continue. Jay Powell said essentially that the economy is not yet ready for higher interest rates and requires continued support from the Fed. So this situation in general, grand scheme of things, makes the markets very difficult to navigate, in my opinion at least. I think that the Fed's activity, keeping interest rates artificially low, printing money just at a breakneck pace, the Fed has straight out said, we have an infinite ability to print money, and that's exactly what they're doing. It makes markets difficult to navigate, it, especially like things like the stock market, even commodities. I mean, every market on the planet is being affected by this. It's really pretty interesting what they're attempting to do here. They think that they save the economy by printing all this money. Is that what they actually did? I guess the verdict is still out. USDA will release its weekly export sales report this morning at 7:30 a.m. Central Time. We're really not looking for bad numbers at all. Corn sales expected to come in 550 to 1.6, soybeans 200 to 1.3, wheat sales 300 to 850, and that's old crop and new crop combined. So we're really looking for some pretty decent numbers again. Remember, tomorrow is first notice day for March grain futures. If you've got long positions in the March contracts in particular, you've got to be out by the close today in order to avoid delivery risk. Corn market is acting okay. We're a little bit lower in old crop futures this morning, but new crop futures are actually higher and posted some fresh highs overnight. So the market's acting well. Again, this ethanol mess, I think, should be short-lived. We should see another good export sales number this morning. Traders continue to argue that USDA's export projection is far too low, and today's number should probably support that idea. The bean market acts phenomenally well. Fresh contract highs in both old crop and new crop overnight. I don't know that this Brazilian harvest delay deal is like the biggest thing in the world. I mean, the crop's going to be big. It's going to be record large in all likelihood, and it's going to be 2 or 3 weeks late. Still, that doesn't really change the U.S. export dynamic. I mean, we've got a record book of sales, and we've already shipped 85% of what's been sold. So even if you were to see some cancellations at some point, I mean, you've still got a great program here. Wheat futures acting really well. Kansas City wheat futures, a couple of the contracts posted some fresh highs overnight. Spring wheat futures posted fresh highs yesterday in new crop contracts. We're a few weeks from knowing whether or not winter kill was a big issue in the Southern Plains. I don't think it was, but we'll find out. Russia has been shipping wheat pretty aggressively. It's likely to slow its pace as these export taxes come into play. Cattle market had a nice day yesterday. Still cash cattle trade really not that great. 114 and a quarter on the Fed cattle exchange. Packer bids were 114. Asking prices closer to 116. So we'll see what develops here today. In the outside markets here this morning, we have the stock market mixed. The Dow's up like a point. S&P's down just a little bit. Precious metals are mixed. We have the U.S. dollar again lower into some multi-week lows. Crude oil is up 27 cents in the April WTI contract at 63.49. The bonds are sharply lower. Remember, if you guys need some more information from me, visit my website, www.standardgrain.com. Go to that website, click on Grain Marketing Plan here in the upper right-hand corner. If you'd like to know what I'm doing every single day of the week, I send out an email every business day at 6:30 a.m. Central Time. All sorts of interesting information, every overnight headline that you need to be aware of, charts, graphics, all my grain marketing recommendations, all that stuff for $49 a month. There's a text message service that goes along with that, no extra fee for that deal. You can cancel this at any time. It's billed to your credit card through PayPal. Certainly check that out and shoot me an email if you have any questions about it. info@standardgrain.com is my email address. Everybody have a great day. I will talk to you Friday morning.